So I'm going to spend about half an hour here talking to you guys about customer strategy as the first sort of big area of connected CRM that we're going to walk you through today. So I thought I'd get everybody's sort of energy up here a little bit and get interactive with the audience here, because customer strategy is a very big, very conceptual topic. Right? It means a lot of things to a lot of people. So I thought I would start the group off with a little quiz. So with a show of hands here, and you have to answer, right? Everybody's got to raise their hand here at some point. I'd like to see who believes that the notion of customer strategy aligns most with the notion of sales and service strategy. Let's see a raise of hands here in the audience. Okay, nobody. Hopefully we're going to pick up some speed here with this thing here. How about media strategy? Okay, I got nothing here. Brand strategy. All right, we got a few there. Customer experience strategy. All right, interesting. Interaction or contact strategy. Can't see that well, that one wasn't popular. Digital and social strategy. We actually got one up there, okay. And then this sort of new, very popular notion of content strategy. How about that one? Okay. Well, you're all wrong. I know, that's a little mean. But I think the point here is, and it's sort of interesting to see actually it was very interesting to see everybody get behind the notion of customer experience strategy, and I think that's a good sign here for this group, because I'd argue that's probably the closest align. But the reality is it really is all of these things, right? I mean, you cannot have a customer strategy, the reality is, and sort of ignore the big, broad strategic notion of interaction or contact strategy, right? It just doesn't really make any sense. You can't be devoid of the digital platform, obviously, right? And this idea of customer experience strategy is important, but I bet you, and I won't take the time to do it, if I took 10 of you who raised your hand and said, what do you mean that customer strategy is customer experience strategy, I would get 10 different answers. I think that's sort of the fact of the matter. So as Merkle is really thinking about and working with our clients on connected CRM, the notion of what is customer strategy had to get buttoned up, had to get sort of nailed down and really tight. and our sort of, I think, brutally simple definition, we'll take a second here, around what is customer strategy is customer strategy at its core is a decision-making framework, right? Helps us make decisions in which corporate assets, big dollars, actually big and small, are invested in the delivery of experiences, and we'll spend a lot of time talking about what that means, against a portfolio of segments and customers, right? And so when we use the word portfolio, we are really trying to evoke the notion of an investment portfolio, right? I have these assets, I have this capital, I'm deploying it against these investments. The sort of unit of investment here is experience delivery, and I'm doing that against a manageable understanding of who my customers are in a portfolio. So these experience investments are designed to create an expected economic return and can be correlated to overall business performance at the C-level, right? So this ultimately, we believe, and we don't think the industry is there yet, ultimately sort of the performance of the customer portfolio will be a sort of key metric that the CEO will report on. Why is it so important, right? And why am I trying to sort of nail this thing down to something that feels more simple, more concrete, right? And the answer is it ensures the alignment, right, of these customer experience investments that everybody in this room is making at millions of dollars. I mean, the amount of budget that's owned in this room around this, around customer experience is massive, right? It ensures that it's aligned to the areas of greatest economic opportunity and provides a practical tool set for senior management to continuously set, monitor, and adjust to, right, market conditions, right? There needs to be a practical tool set to do that. So brutally simple definition. All right. So let me sort of peel it back for you a little bit here before I launch into how it works, right? So this idea of customer strategy, in our viewpoint, begins at the most atomic level, meaning the smallest sort of unit of customer strategy really is that point in time individual interaction with the customer. It's where it all it's obviously where the rubber meets the road, right? A single paid social media impression, a Facebook exchange, single ad impression, let's just say, right, delivered against a customer, right, has an expected, it's got a set of decisions associated with it targeting, frequency, placement, creative, how much am I willing to spend on that thing, how much am I willing to bid on it, and it has an expected return, a concrete expected return, right? Even if I spent a penny on it, it has an expected return. So that's at the most elemental level, right? Of course, we all know, and I think in the other sections of Connected CRM we'll cover, this idea of the longitudinal experience, right? And this is important in customer strategy because we all know that that one Facebook impression, right, does not drive the customer decision, right? No individual touch point does, right? So I've got to, as a marketer, I've got to array this longitudinal experience against that individual customer, and I have to have a strategy associated with it, right? I have to be conscious and clear on who that customer is, how do I want to array these experiences over time against that individual, and again, what is the expected return, right? It has to have a clear financial outcome associated with it. And then, of course, I've been sitting here talking about a single Facebook, impression against an individual, but of course, and if I could do a better job graphically, there's millions of these longitudinal experiences that are happening constantly, right? And so how do we manage against that, right? So at its sort of broadest level, and I think this is an important, construct here, customer strategy at a portfolio level really allows you to, manage at a segment level, right? And at a broad program level, these set of investments, right? So how am I doing against that, right? So for example, what is the opportunity of spending an incremental $5 million for, said company against this particular segment in lead generation, right? A, is that the right strategy to pursue? And B, what is the size of that opportunity? It's a pretty good question. I think we'd all like to know the answer to that. Versus shifting those dollars to retention for a different segment, against a different program, right? That same $5 million, where is it better spent and what would be the outcome? What would happen, right? Down at the sort of bottom line there, right? What's the total optimal media spend? So if I'm focused now on the segment lens, or on the program lens rather, right? What's the total optimal media spend for lead generation? How much should I spend? It's a question we need the answer to, right? I think customer strategy drives that. You go sort of across the other dimension against a segment. So if you have segment managers, you have a segment strategy, right? What will my total portfolio returns look like against segment A in 2013? If this feels a little bit too tidy to you, and if it feels like, yeah, right, it can't happen, there are people in this room, right, they're building the tools, the skill sets, and starting to deploy their strategies with the underlying data set, with the underlying processes to make this chart come true. Right, and actually, we're going to see some presentations against that later today. So if it sort of feels like fiction, it's not, right? And it's based really on a very sort of natural desire to have control over this. So that's customer strategy in our view. And then I got one more build here. So, and what would be the total, portfolio value? What's the total value of my portfolio here? So that's the what. And so now I'll spend another, 14 minutes here against the how. So the how really is broken for us into three major sections here. So enterprise segmentation, right? So who are my segments? How do I define them? And those are sort of the dimensions there. Portfolio strategy, again, this sort of investment mindset against how do I invest against that portfolio and what are those returns? And then ultimately, segment strategy is the tee up to the other parts of Connected CRM that say, hey, look, based on the insights, based on the portfolio strategy, here's how we want to go to market. Now, the teams that now own things like the analytics, the measurement, and the execution now have sort of what they need out of customer strategy to go and run and execute against the plan. Okay, pretty simple. So we'll start with enterprise segmentation. So, I think in the presentations you'll see later today, or actually this morning, we'll get a lot into the mechanics of segmentation, but the simple and sort of very concrete viewpoint that we have is you have to have segmentation. It has to exist, it has to be at the enterprise level, right? And it needs to be, and we use the words here, very rich and actionable. And what we mean by that is it needs to be attitudinally and need-based, right? It needs to be driven by research and insight on who your customers are and what they want, right? But it has to be actionable in the sense that it can't live in a binder, right? It can't be this sort of panel or research-based thing. It's got to exist in the database. I need to be able to map it to every existing customer that you know and have had for 20 years, as well as prospects that you don't know today. That it's the entire sort of marketable universe. Has to exist at that level, and it has to, I've got 5 segments up here. Maybe there could be 6. I know it sounds sort of ridiculously prescriptive, but basically it always boils down to 5 or 6 segments, right? Because it's manageable, right? People in the organization can understand, they'll memorize these names, they'll understand who they are, right? And they'll be able to absorb and manage against planning against these set of segments, right? And so you can sort of see here, very simply, right? We've got the breakdown of the US market in this case here against these different segments. We've got demographics, of course, you've got to have that, and we've got attitudes here. And this is very summarized, so we'll have a lot of richness against these sort of attitudes and needs against products, against the customer experience, okay? Has to happen. The other must-have here, associated with this is value, right? So I guess my broadest statement here would be, it doesn't really matter if you're not prepared. Like in the insurance industry, there's a lot of levels, for example, of sophistication against this notion of lifetime value, predicted loss characteristics, retention, average premium and things like that get into the mix. But if you're not ready to get there and you only have a revenue basis for value, fine. Right? It's better than not having it, because if you don't have value, the decision-making framework breaks down. So in this example, what we're looking at is these 5 segments really mapped against value here, right? So in this particular case, we were looking at product propensity, cross-sell propensity, right? So how much product can I sell there? How much premium can I generate? And then survival curve being this notion of retention, really, right? And then there's the cost side of things, and then there's the loss side of things. And ultimately, in a very practical way, we're able to take these 5 segments and break them into high, medium, and low LTV, right? Broadly speaking, so high people being above $10,000, et cetera. And then we're able to go against these segments and take a look at how do they map against these value segments, right? So where are the pockets of richness? And there are pockets of high value against all of these segments. So then we move into portfolio strategy, right? So I think this is a sort of a big money slide, as we say here, in the sense that, because the segmentation is so actionable, meaning I have all of the data, right? I've got everybody in it, I can start to look at the customer life cycle, and I can start immediately seeing pockets of big economic value, right? So I can see that movers and shakers here, right? First of all, represent 56% of profit. They're very, very valuable to me. Right? They're 27% of the market, yet my leads index is only 90%. So I'm under-indexed, right, in terms of the amount of leads that I'm generating against this group. So it's clearly money there, right? Sort of on the inverse, if you take Family Matters and look at the lapse rate, right? So this is real data that's sort of in the database, so to speak, that's part of the segmentation, and we can say, look, there's big economic opportunity against turning around retention here. Right? So it seems stupidly simple, yet I think everyone on some level here in this room could sit there and look at this map here and say, Jesus, if we really had our arms around this on a real level here, we could make decisions and we could create some advantage. So just kind of going down this road a little bit more here, if you took those movers and shakers and you took those economics there and you can align, and I think this is a big important notion, with your finance team, right? And with your CFO on the left around what's sort of the definition of success here, this sort of this value case. And in this case, we're really just using a very widely accepted notion of, hey, let's take a look at the cash flow, right, associated with with a particular segment, as well as layering in some notion of fixed and working capital, and let's agree upon, right, what value is economically. Then we can take a look at movers and shakers and say, hey, look, that 90%. That 90% index against leads, if I could shift sort of my overall lead flow and increase from 30 to 50% of that overall lead flow to this highly valuable segment, $48 million in lifetime value gets generated, right? It's again, brutally logical, but if we have the data and we can get the organization aligned around this, we can make some money here. So taking a step back, you take a look at the portfolio and say, yep, that was movers and shakers, but you can map the money all over the place, right, against these segments and against the life cycle, right? So this represents here, the money, so to speak. So you see that $48 million in lead, if we sort of shift the lead mix, $48 million against that spot, against movers and shakers, and we can start seeing on the right-hand side there how it all starts to total up. Right? And these numbers are not important, but we start to see the value of the portfolio and these actions at the bottom, right? So just very simple, movers and shakers, let's up the lead volume there. Let's up the lead volume and conversion, right? And you see some of the other strategies there. The next step in the process is how to move the money, right? So that financial calculation and discipline associated with the previous slide then translates into decision-making around, look, we are not going to spend this money, so we're going to spend less money against the passives and the loaners, and we're going to reallocate significant spend, right, sort of at scale here against movers and shakers and family matters, right? So again, it seems really logical to do so. The problem is these kinds of decisions rarely can get made, right, because there's not confidence in the underlying data and the economics, and there's not a widely accepted view of even who these segments are, so there's paralysis, right? Yet, when you have all these things baked the right way, we can start moving money around at scale, like really important notion there. And so then we move into segment strategy. And you know, we at Merkle really think of segment strategy most broadly embodied in this idea of the segment brief. And if you think about the major components or the dimensions of that brief, product, price, channel, and media. Decisions have to get made here, right? Inputs have to be provided to the rest of the organization that's going to execute on these things, and they live in those sort of 4 big buckets there, right? So we've got, and it lives at a segment-specific level. So there needs to be clear decisions for movers and shakers, for family matters, for all of these different segments against those 4 dimensions, and they get delivered against the segment brief. This is the output sort of the whole exercise. So while, you know, and I think Peter Vandry and Scott Nurnberger are going to talk a little later about the financial management section, sort of the mechanics and the how and sort of where media mix and attribution and things like that take place. But media mix as a decision-making framework, the outputs of that live in segment strategy. Meaning, I've got movers and shakers. You saw the previous slides at the portfolio level about what I need to get done. And then now is where the rubber's starting to meet the road very clearly on mix. Right, so I'm going to spend against movers and shakers. On the far left-hand bar there, you see what happened in 2011, 2012. Right, there was an original planning process that was undertaken, a traditional process to say, hey, look, we don't have as much budget. We're gonna move that down in 2013. But then media mix optimizes that mix, shifts that mix around, and says against this particular segment, against your business objective, that's the optimal mix. Right? And this becomes sort of the input to the media agency, to the media team, and so forth. Okay? Next big piece here, at a very simple level, is product mix. So we're using an insurance example here, but near term, focusing on the term life product. So in this particular industry, as some of you in that industry would know, there are some very different products that map against very distinct segments here, and so we need a very clear understanding of customer insight to understand which products to map against these customers. So we're going to go after term life here in the short term, AD&D, and then ultimately retirement, right? Nothing, no sort of big magic here, just sort of clear decision making against that portfolio. Here's some of the some of the richness that goes into the segment brief that's research based, ultimately around positioning, around product and price. Right, so ultimately the creative teams are going to build the messaging. It's a very competitive marketplace. You ultimately need for this particular segment, what are sort of the key takeaways? What are the customer insights around how I position this product? Right? We're not always, and a lot of people in this room aren't always going to get to be the low price sort of offering. So how do we position against that? Channel insights. Right? So this is actually where things get, in my view, nice and tactical on a certain level. So the research that gets done and gets built into, and ultimately the data, behavioral data that gets built into segmentation starts to lead us down a path towards how do I execute against this particular segment, right? So movers and shakers are a very distinct segment. So what we want to do here is, build a very rich online experience, right? We want to drive these people into the online channel. We want to build a segment-specific .com experience and landing pages, enable new functionality, right? Sort of innovate against the actual experience itself with the idea of an email quote, which actually would be interesting. Using mobile to help people through that experience with exam reminders and appointment scheduling, right? So these things start getting very tactical, but now we get this sense, very strategic sense of what do I need to build against? Okay. So that's really it, guys. Customer strategy, I think, of all three of the sort of big, or 3 or 4 big sections of Connected CRM is really pretty simple. It's not simple in execution, but in concept and what it needs to accomplish is relatively straightforward. So just to summarize the key takeaways, customer strategy exists at its core to give executive leadership a systematic way to manage against their customers as an investment portfolio. Right? So this idea of I'm a CEO, I'm a CMO, I have this portfolio, and I can move the pieces around. Strategy is built around delivery of experiences against those segments, and it always has to have an expected economic return. That's sort of the unit. That's the sort of game piece that we're moving around on the board, so to speak. Provides clear direction against 2 key dimensions, broad dimensions, segments, and life cycle. Right? We have to have a sort of a simple 2-dimensional view of where to move the money and how to think about our strategy. And then provides input, to summarize, to the other teams around marketing and product mix, and provide insights in the form of this brief around who these customers are, what their needs are, and how we should execute from an experiential perspective and from a channel perspective. And that is it. Thank you.